keep me posted. Yes, coming back to this, what we are doing, we are talking in terms of cash, the little bit easiest one, okay? How we have to, whenever we are doing the audit, what is the procedures we have to adopt substantive procedures in terms of cash and bank audit. When we are talking about the cash and bank audit, what do you mean by bank confirmation reports? When you are saying it's a bank confirmation reports, it is the reports from what? It is external confirmation. Is it? This is the one of the external confirmation reports which you have to take into consideration in obtaining the evidence with respect to bank and cash. Is there any evidence? What happens? First, think about it. When you are every company, every other business will have one bank, or you will have a multiple bank accounts. You will have multiple bank accounts. When you have multiple bank accounts, whatever the cash balance is there with us, with the cash book, and with respect to the bank book, it has to get tallied. When we have this reason, is that bank book. When we have these reasons, what will happen? You will have, first you have to get what is the actual balance, what is there. What is the balance which you are having with the cash book and the bank book. The second bank, all the active bank accounts, we have to get confirmation. We have to get into confirmation with those bank accounts which are non-active also. We have to get confirmation from those accounts also which are having zero balances. Is it? Not only that, we have to get the confirmation of those accounts which have been opened during the year. Either it has been opened during the year or it has been closed during the year. Here is getting a thing. What are the active accounts? What are the non-active accounts? What are the zero balances accounts? Which accounts we have been opened? Which accounts we have closed? All the bank accounts that has been in place with respect to any firm as such. That is what we are doing. We are taking multiple evidence. In terms of active accounts also, we will take multiple evidence as we have done. Substantive means we will not take only one source of evidence, we will say multiple source of evidence. Is that other evidence in terms of bank as well as other evidence in terms of cash. We divide, we divide the bank and cash into two different categories. Now what happens when you are doing the things? The same procedure which we have adopted. What is the procedures before the count, what is the procedure during the count, and what is the procedure after the count. Is that what is the procedure after the count? Follow-up procedures which we have to take. Is that this is what we will work it out. Explain what are the audit objective and the audit procedures. Fine. Now when we do the things, getting the bank confirmation letters is one of the criteria, and getting the other evidences with respect to other evidences and bank reconciliation. Here the basic element is every firm nowadays people have if you take Excel, they will also do with the help of Excel we can do bank reconciliation. That is a part of every firm to do bank reconciliation at the end of the month as such. Fine. Now the same thing which you are doing, we are talking about the test of controls, restrictive procedure, if it is effective, if it is satisfactory, restrictive procedures, unsatisfactory, full substantive procedure. Now what is the concept of cash in the financial statement? When we say cash, it is been identified as the cash in hand as well as cash on deposits. Is that cash in hand and cash and bank? Simple, very specific. Is that? Now What are the audit objectives? Audit objectives has been 1, 2, 3 and 4. The one which I have sent earlier and the one which I am doing, nothing is there, just I have compiled it in a one single with respect to the slides only, it will be less. Content I have not reduced. Okay. What is the existence? Existence is nothing but record cash transaction exists as at the period end. What is the actual balances? Is it what is the actual balances? What we have recorded? Okay. Completeness means whatever the recorded balances includes the effects of all transactions have been occurred. In terms of what happened, some will be in cash in hand, okay, cash in hand or cash at bank. Some will be there in cash in transit. We have recorded, we have paid, is it right? We have recorded that we have to pay, but actually we have not delivered the cash. We have issued the check, but the check has not been went for clearance. Okay, we have issued the check to the customer, but the customer has not. The same things which we have come across in terms of bank reconciliation statements. Fine. Rights and obligation has the legal title of all the closing balances. When we are saying it's rights and obligation, what we have to receive and what we have to pay. Okay, what we own and what we owe. What we own and what we owe. We have the legal title that we are going to receive or not. Is it? Maybe it is a receivables. Is that? It's a receivable. Then we say that yes, if sales has been happened, then it will be converted into receivables, and we have the right over the receipt of cash. Both in terms of receivables, I will pay right this. Receivables, you have the rights, and payables, you have the obligations. Assertions related and ultimately we have to think about presentation. Disclosures related to cash adequate and accordance with the accounting standards and legislation. We don't have, actually if you ask me, we don't have any specific standard for cash. Is that we have for inventory, is that we have for receivables also, it comes from the revenue. Okay, it comes from the credit sales and subsequently it is the revenue and revenue to cash as such. Okay, how it has going to be presented. These are the 4 different assertions. Is that you have 1 minute. It is not 4. Is it right? Existence, completeness, rights, valuation, and subsequently it is presentation. What is the first one? What we have to think? The year-end balances usually confirmed by direct confirmation with the bank holding the account. See the thing, they will send you the at the end of the month. Is that end of the month they will send you the bank statements. Is that at the end of the month they will send you the bank statement as well. But even after receiving the bank statement, we have the auditor has the right to send a letter to the bank by communicating. We have to come with the permission of the client. Okay, with the permission of the client, the auditor has the right to send letter to the bank to reconfirm the balances. Fine. The year-end and especially the year-end balances. Okay, especially the year-end balances on the reporting date. With the bank holding the account. With respect to all bank accounts. This is the third party source of evidence and so provides the auditors. Third party source of evidence, it is more reliable. Is that it is more reliable and so provides the auditor with excellent audit evidence. The bank confirmation covers the assertions. Is the assertion, it means it will be complete existence, rights and obligations. Is that bank confirmation? What is the completeness? When you are talking in terms of completeness, it talks about the what is the recorded cash balance, including all taxation that have been occurred in terms of existence, as well as in recorded cash balances at the year end, and completeness, rights and obligations. We have legal title. Definitely, whatever the cash balance that has been shown in the bank, the client has the ownership, has the legal title, legal ownership over that cash balance as such. Here, what we are going to use, we are using the IS 505 external confirmation. These are external confirmations with respect to the banks. Now, what is the approach to the bank confirmation? What is the procedure we have to adopt? Listing balances and listing balances and other information in terms of balances and the bank account numbers, requesting confirmation of their accuracy and its completeness. You have to sort out what are the, how many banks are there, okay? How many bank accounts are there with respect to the client, and with respect to the each account, with respect to the each account, we have to get the confirmation. The purpose of getting this is, it talks about what? It talks about the accuracy and the completeness. Is it? Now, when we are receiving, what is the purpose of confirmation letter is requesting details of balances and see what are other information. Okay, what are other information? Other information relating to any guarantees. Is it right? Other relationship with respect to any loans. Other information is respect to any overdraft, or other information is respect to any financial terms and conditions attached. Don't say that what is the other, when we say it is other information, see you have any collaterals will be there. Is it right? Any collaterals will be there with respect to any financial terms and any financial activities. Okay, any collaterals, guarantees. We have taken any loans with the, which are the various types of loans that has been connected with the client. Is there any overdraft facilities? Whatever is related to the client activities toward the cash, that has to be reflected in the confirmation from the bank's letter, which can be then compared with the client's records. Auditors need to decide which of these approaches is the most appropriate. Responses need to be sought for all confirmation requests. Response. See, it's not like that you are just sending the thing. You have to get the response from the bank. Okay, we have to get response from the bank. When we are getting the response from the bank, confirm our content and dispatch and confirmation request is the auditor's responsibility. Is that control over the content? The auditor has to write. Is that usually the auditor has to write what he thinks fit, what he needs, what his requirement in terms of bank balances, and dispatch when we are talking about the sending the request. This is the auditor's responsibility, but the request must be authorized by the client. The request has to be with the client permission only. It has to be sent. The auditor cannot. Okay, the auditor cannot override. It is not only happens with respect to the cash. Any confirmation, I am telling you this, any confirmation which the auditor is going to send to the third party, he has to take the permission, or it has going to be authorized by the client as such. Replies can be sent directly to the auditor. You are see the thing, you are as an auditor, is it right? An auditor, you have to send it to the third party. Okay, when you are sending it to the third party, what happens? The auditor has to take the permission of the client when you are going forward. But when the third party is replying, the third party can reply, has to reply directly to the auditor. Okay, this is now you can understand what is the process which happening when you are going through the sending the confirmation to the third party, and what is the process which is going to be there with respect to the getting the confirmation. When you are getting the confirmation, what happens? There should be a pre-addressed envelope should be enclosed. Means in nowadays, if you take the things, when you are sending it, auditor is sending it to the third party, it has to be, if you are sending by email, it has to be CC to the client. But when the third party is sending to the client, there is no need of sending it CC. They can send it directly. They have to send directly. Is it? They have to send it directly to the auditor. This is one of the important points. Somewhere they will ask you in the MCQ. Yeah. Item, what are the things we are saying that include included items included in the confirmation request. What are the, we have said, what is the other information? Balances due or from the client. Do you have current deposits? You have saving deposits, you have loan, bank loan accounts, and you have any other accounts. Is there balances from the current account, deposit loan account, savings account? Savings account will not be there. As a matter of fact, if you're taking the business, which is only a current account that applicable, in case any loans are there, deposit loans are there, or any other thing. We want to know the confirmation for any nil balances also. You will have some zero balances accounts, okay, which are non-operative in nature. For those balances also means, as a matter of fact, we have to I will write as all accounts, all bank accounts. Accounts closed in the 12 months prior to confirmation. Whichever accounts we have closed, for those accounts also we need confirmation. Maturity and interest terms on loans and overdrafts. Is that on loan? If you have taken multiple loans, then what is the duration? Is that what is the duration and what is the rate of interest on terms and overdrafts? If they will give so many facilities. Is that as for us also, if you take our own individual accounts, they will give so many facilities, but some facilities will make it active and some facilities we don't make it active as per our needs and requirement. In the same way for the business also, if what are the which facilities we have unused, okay, which facilities we have. Now, lines of credit and standby facilities. Is that we will have, if we have any overdraft, okay, overdraft is a standby facility, is that what are the lines of, what are the for which loans, as a matter of fact, which loans we are eligible, is it right? Which notes we have, the client is eligible, and what are any standing instructions are there. Standby facilities is nothing but any standing instructions has been there for the client about any overdraft facilities, any type of loans. They have standing facilities, nothing but they have the prior approval for any services as such. Any doubt is there, you have stopped me. Okay, I can sense where there you need more clarity. Any offset and other rights and encumbrances. Is that any offset means what will happen usually, as a matter of fact, is that we have learned one word, pledged, okay, which we have learned in inventory. Is that which we have learned in inventory? What is going to be there in that? In the inventory, we have pledged. The moment this inventory is sold, is that if this inventory has been sold, we have pledged on the inventory and we have taken the loan on that inventory value. We have taken the loan on that inventory value. The inventory is sold. What the revenue will get, when the revenue we are going to get, automatically bank will have the first right to recover that loan. Is that bank will have the right to recover the loan. Fine. This is what it says. Is that any offset means offset means receivables and payables. Any offsets means any you have to match any receivables and payables, and any net balances you have to return it off. Is there any terms and conditions is attached to any of these related activities that has been concerned with the client? This is point number 7. Yes, tell me please.
How the working capital facilities and the long-term facilities are linked with the cash assertion?
Again?
How the working capital facilities balances and long-term facilities with the banks are linked with the cash assertion?
Which type of assertion?
Cash. So here we're referring to the cash assertion procedures, right?
Yes.
How these details, the loan balances and the security held against these loans and facilities linked with the cash procedures.
Okay. How it will deal with the cash procedure? See, when you have the assume you have think cash and bank in one aspect. If any claims are there, is it right? Any claims attached. Any claims attached to with the client with cash and balances, then the bank will have I will say bank authorities will have first claim on that cash balances. On that cash balances. Now, when we have like this, okay, where you are saying about the lines of credit, any offset or rights and encumbrances, is it right? Now, you are as an individual also, and you take as a in person or in firm also. We want a bank clearance, okay? We want a bank clearance letter. When you want a bank clearance, no objection certificate, whether what we call it as NOC from the bank. What the bank will do, bank will take care of, bank will review or review all the any facilities you have availed. If you have any facilities you have availed and you don't have any obligation towards any, if you have loans, they will not give you a NOC. Is it right? If you have any, you have to clear off the long-term loans, you have to clear about the credit cards, that is the short-term loans. I'm talking about individuals. Okay, same applies to the company also. There is no difference is there. Company, you will have more facilities will be there. Company, you have more facilities there. The moment you have a bank account, is it right? You have the bank account. What will do? You request, I need these type of facilities, 1, 2, 3, 4, 5. The moment you are placing a request, is it? You are placing the request. What will happen? The bank will make that request active for us. Is that for the client, for the company? Is that now you have 5 different. There are 5 different requests options are there. You have not opted for the. We have opted only for to make it active 3 requests. Okay, 1 request for the overdraft facilities, one request for the internet banking, one request for your credit cards. What is it? You have requested 3. They have made it active. Now at the bank confirmation at the year end, bank will give a letter that these services are active and these services are not active. Okay, these services are active and these services are not active. Now, again, for those services which are active, is there any obligation from the client towards the bank? Is there any obligation that has been there of the client towards the bank? Assume you have an overdraft facilities. When you have overdraft facilities, you have used that overdraft facilities, and you have to owe to the bank. Is that you had owed to the bank? The bank will say at the end of the year to the auditor that the client has 3 active services. Against these active services, these type of obligations are there, financial obligations attached to the client. That information bank will furnish on behalf of the client account to the auditors. Is it clear to you?
Yeah.
Okay. That is the reason. That is the reason we will ask what are if one account will take what are the services they have used, for that bank account any obligations are there. This is as simple as that. In other words, it is a simple way of getting I will not say NOC, but it is the things what we will go through of getting a no objection certificate from the bank. Is it okay?
Yeah.
Is it? Next. Details of if any collaterals or guarantees are given or received. Okay, given or received by the bank asset. Any contingent liabilities. Contingent liabilities means any clauses has been attached, any rules has been attached to any part of services. Basically, when you are saying contingent liabilities, in case what happens, you are talking in terms of factoring. Okay, in terms of factoring, when we say in terms of factoring, what will happen? You have to receive it. You have to receive the money. Is that if it is not paid, by the customer, then definitely the client has to pay it back. Okay, the client has to pay it. What are the 2 types of factorings are there? Any idea?
No.
What are the 2 types of factoring are there? Once class is over, just go through it if anything is there. Is that there will be a with recourse and there is without recourse. Is that you just keep it, you go through it. If you come across any way, if it is not there, I know what I am saying. I will explain you whenever we are going to come across anything in the examination, but in the examination questions. Okay, with recourse and without recourse. Any securities held by the bank. Is that we have taken the loans. Is that when they have taken the loans, any non-current assets has been attached. Okay, on any non-current assets we have taken any loan, or any non-current assets given as a security for any specific loan. Any non-current asset has been attached. Okay, any non-current asset has been attached, or a cover up. Okay, or a cover up for any type of loan which you have taken. Is that which you have taken? These are the various different things which items has been included by the auditor in that letter sent to the bank with the authorization of the client. Right. Now, what is the bank confirmation procedures? Is that the bank will require explicit return authority from the client to disclose the information. Explicit written authority means the client has to approve, the client has to authorize. Is that nobody will reveal if I am an auditor, if I am coming on behalf of the bank will never trust auditors. Okay, this is a third party. But if the auditor is approaching to the point, on the letterhead of the client, getting my point, on the client's letter of authority, on the client's letterhead, with the client permission that we need this information, then only the bank will entertain, bank will accept that request. The auditor's request must refer to the client's letter of authority and the date thereof. They have to mention that we need information for 31st December 2023 very clearly. The client has to mention that the information related to on which specific date. Okay. The second one, alternatively, it will be countersigned by the client or it may be accompanied by a specific letter of authority. Now you got the concept, you got the understanding very clearly. If the auditor is requesting the client, requesting the bank to give the letter, it has to have the authorization of the client. Okay, on a for a specific letter. Again, the signing authority is also important. Okay, who have the signing authority, those persons has to give. In the case of joint accounts, letter of authority signed by all the parties will be necessary. More than one signatory authority. Is that if you are having a more than one signatory authority, is that in that case all the people have to sign. Okay, all the people who have the authority, they should sign. All the signatory, is it all the signatory authorities. Such letters of authority may either be give permission to the bank to disclose information for a specific request or grant permission for an indeterminate length of time. For either it is for a specific period or they say with effect from. Is it that? They will say that either it will be on the reporting date 31st December 2023 or they will say that with effect from. Is that with effect from? When we say that with effect from 1st of January 2023, then that will be a standing instructions. Again, unless until the client will give another letter that these auditors has been replaced, new auditors have been replaced with new auditors came in the place of the existing auditors, and from now onwards we have to give the letter, we have to acknowledge the existing auditors. Is that either it will be in two terms, either it will be on the 31st December or it will from with effective from. The request, what they say, they should reach the branch manager at least 1 month in advance, and the client's year end should state both that year end and previous year end date. Previous year means what is the opening balance, is it right? It has to say what is the on which date we need opening balance as well as the closing balance. The auditor should themselves check that the bank response covers all the information in the standard and other responses. The auditors should themselves check that response covers all the information what has been requested by the auditor on behalf of the client. Fine. These are the things which bank confirmation procedure should be needed. I mean, it has to be, in nutshell, it has to be authorized by the client and whoever is, if it is joint accounts, all the signatories have to be mentioned, and what is the opening balance and closing balance, and whatever the information is given by the bank, the auditor should check that they received all the information as stated in the request letter. Okay, now we have some window shopping. Is it we have something concept of window shopping? It is also called as a window dressing. Is it window dressing? When we are talking about the window dressing, one thing that always come to our mind is the cutoff. See, bank is very sensitive. Is it right? Why we are talking about 31st December? Is it right? 2023. Take an example of 23. The last, I will say, the last 15 days and the first 15 days. Is that the first 15 days of the next new year? Is that the last 15 days of the current year and the next 15 days of the new year are very important. As an auditor, you will focus on this if there are any deposits, withdrawals are there or not. Because it's see what happens, people, if there is any balances, the clients will spend huge amount. Is that huge amount? Whatever the balance they want to spend left, so that they can utilize all the budgeted amount for that current year. Or sometimes what will happen is that in order to boost up the balance, getting my point, in order to boost up the balances, we will take the receivables of next year to this year. Is that we will take the receivables, or we will take the if we are having more balances, and simple terms where you want to have plus or minus. If you want to boost up the balances, there are so many different techniques are there. Okay, this is the window dressing, short term. If you want to show from positive to negative or negative to positive, the bank balance is open to the risk of window dressing. So cutoff must be audited carefully. Date the last 15 days and the first 15 days. Management try to overstate liquidity by keeping cash book open to take the credit of remittances actually received after the year end. What they are saying that they will try to overstate liquidity. They what will do, they will try to increase the cash balance. Is that they will say that yes, by just not closing the cash book and take credit for any remittances which has been received after the year end. By this, what will happen? Either you have the options to overstate cash or you can understate receivables. What is happening? Your cash balance will increase and automatically the receivables will decrease. Is it? This will decrease. There is a possibility. Is it that your receivables are there which is going to be received? You will say that yes, you have received, but that receivables is not for the current period. That receivables is for the next period. What will show? You will show that receivables you will not close the cash by 31st December. Is that you will not close the cash book by 31st December. And definitely the receivables of the next year, we will post it in the current year. What will happen? The current year cash will increase, the next year receivables will decrease. Or recording checks paid in the period which are not actually dispatched until the period end. You have what happens? You will draft the check and you will reduce what? You will reduce bank balance. You will say that what you will show in the bank reconciliation, you show in the bank reconciliation check issued. Check issued, but actually check has not been encashed. Okay, check has not been encashed. Your cash book will decrease, but the bank will not decrease. In that case also, what will happen? you are understating the cash, is it? You are understating the cash and you are overstating the liability. Liabilities is not decreasing, but what will happen? The cash balance will decrease. Means they have lot of avenues, lot of uh, situations where I will not say it is an error. It is a part of, definitely it is part of misstating the cash and bank balances. Is it? What is the substantive procedures to test the bank balances? What are the obtain standard bank confirmation from each bank which client conducted business during the audit period. They say from each bank. Obtain a bank confirmation letter from the each bank. We perform arithmetic, basic mathematical calculation. Now you see the flow, how it will work. First you have to get the confirmation from the each bank, then you do the arithmetic total for the bank reconciliation. What we are doing for bank reconciliation, just remember, revise those steps. The third point, what we are doing, trace checks shown outstanding from the bank reconciliation to the cash book. Any checks are there which has been shown as a outstanding, is that prior to the year end, okay, prior to the end and after date. Is that one side we have to take before year end and one side we have after bank date statements. Is that after bank 31st December and obtain explanation if there is any large or unusual amount items. We are not talking about small amounts, any huge amounts, is it right? That is the reason when we are talking about the cash audit procedures, we will see that what happens in the last 15 days, any unusual amount transactions has taken place or not. Is there any unusual transaction? Unusual transactions, it will be large, high value. Fine. Compare cash and bank statement in detail for the last month of the year, and we have to know what are any outstanding at the recon. The process of bank reconciliation, comparing cash book and the bank book. Reviewing bank reconciliation. Is that reviewing bank reconciliation previous to the year end reconciliation? And next, what does it mean? What does it mean? Point number 5. What is your understanding with respect to point number 5? Tell me, right or wrong, I am here to help you.
No idea.
Yes. Tell me, Gaita, Mariam and Laila, what you are understanding? Review bank reconciliation previous to the year end bank reconciliation and test all items are cleared in the last period or taken forward to the year end bank reconciliations. When we are doing a bank reconciliation, is it right? Assume we are doing a bank reconciliation for the month of December 2023. Then we are not only exclusively treating this bank reconciliation, we also have to take the bank reconciliation of November. What you see, there will be some items will be there in the there are some items will be there in the month of November, bank reconciliation. By the time we reach December, these items has been cleared off or not cleared off. If these items has been cleared off, these transactions has been settled down, these checks has received, definitely it will be not reflected in December to next month. It's not only for the month of December we have to do reconciliation. We have when we are reviewing when the auditor reviews the reconciliation, bank reconciliation, the auditor will review the reconciliation based on the previous month, based on the previous year. Get my point? You are doing for 2023, then you are supposed to take what? You have to take the report of 2023 and you will take the 2022 December and 2023 January. Getting my point? If you remember that what we are doing with respect to the inventory, with respect to the sales, with respect to the receivables, what the three documents we are going to review is that we will review for the December 2023, we will review what happens during the January 2023, means we'll take the current balance and we'll take the opening balance. We'll compare the opening balance with the previous year closing balance. Three steps will be there whenever we are doing reconciliation. You just
mean
don't.
all the differences
Pardon?
you mean all the differences which reported in November 2023?
Not
doing
audit
bank
differences.
reconciliation?
Not audit differences.
I mean the bank reconciliation differences.
Yeah, the bank reconciliation, what they prepared in November 2023, we will verify with December 2023.
The differences should be reflected in November 2023, right?
No. See, November 2020, last month you have made bank reconciliation. Okay. Now, this month you will prepare a bank. Now, there will be some positive lodgements will be there, some negative lodgements will be there. Okay. In the last one. Now, the moment you go for the December, whether these lodgements has been cleared or these lodgements has still outstanding. If it is cleared, it will be not reflected. It will not reflected. If it is not cleared, then it will be reflected.
But is it fine to reflect these differences in December 2023?
Fine. See, assume you have issued a check. Is that you have issued a check? Is that you have issued a check? You have issued a check on 15th of October. Is that you have issued a check on 15th of October? It has been not cleared in November. It will be there in the November. It is not cleared in December. Is that it will be there in December. Even see what is the check duration? Check duration period is 6 months. Is that check validity is 6 months. In 6 months, till 6 months, it is the client's prerogative. The client wish that you can deposit or you cannot deposit. The client will not deposit till next 6 months. He will deposit the check on the 5th month. In the 5th month, he will deposit the check. Fine. There is no issue as such. But if it is not there, you have till it is not cleared, till it is not encashed, it has to be shown in the bank reconciliation statement.
Okay.
Also, sir, the audit, I remember in our last company, when we do bank reconciliation, if suppose sometimes, because the manager is not there, so we send usually TT. And the payment, we make it next day, but the audit has catch this one and say, no, there should be no gap between the payment and the clear from bank.
some TT will be, it's a online payment, na?
Yeah, it's online payment, but sometimes what we do in most of the cases, sometimes we send the TT for that time if it is urgent, like suppose, but later we do the payment or make JV. But audit say that it's not correct. We should they, between the payment and the bank clear statement should be no gap.
Same day settlement.
Yes.
Is it same day settlement? Yes, that
Not
will
same
be
day, but at least if we do it for the payment should be before the clear of the bank.
before the closing of the bank.
Yeah.
Is it before the closing of the day, as such, as simple as that? Is it at the same day the bank, the balances has to be settled down? Is that it happens? I will tell you the example of this. Is it? I will tell you the example of this. Is that if why happens? If it is the same bank, now the technology has been so fast, it will be settled. It will be settled nowadays in the same time. If it is the same bank, the settlement will be done immediately. Previously, I am talking about now, not now. Now everything is done immediately. Same bank. If it is an other bank, is it right? If it is the other bank, the settlement will be done next day. Okay. If it is a foreign bank, is it? If it is a foreign bank, the settlement will be taken for the next 3 working days.
Like most times, sir, it's take foreign country at most it will take, I think, week.
Yeah, fine. I'm giving a example for you to understand. It is that it is sometimes 7 working days, sometimes 3 working days, like that. It happens usually previously. Now it is not there. We got that SWIFT code is there. You have that unique number is there. Is it right? You have iBank number is there. Everything is there. Yeah. When we are having all this technology, even maximum most of the time it will be settled on the same in the same real time. Is that it? Nowadays it has been done with respect to real time. If any imbalance, any inconsistency, it will be there. Why the auditors will say that is the point of contention, that is the point of discussion. Why the auditors will say? Auditors will say that if it is not there, assume you are talking in terms of 30th November, last day, is right, last day. The moment you are transferring it, what will happen? You will decrease the cash book. The cash balance will decrease. But if it is TT is not affected, the bank balance will not affected. The bank balance will be more, the cash balance will be less. When you are showing in the financial statement, we show the bank balances. We are misleading, is it right? We are misleading the stakeholders by showing the more balances. Automatically, what they will think that yes, the bank balances has been substantially in a good position. Now, assume, take the another way around. Is it right? You are saying a amount of 10 million. Is it? You are saying an amount of 10 million. 10 million for 2 consecutive months for different transactions. Okay, for different transactions. That for November 10 million has been not clear. It will be done in the month of December. It will be done. This is very clearly. It is part of November and it will be done in December. If it is not done in November and it is going to be done in December what will happen? 10 million will decrease. Fine. Now you see the thing. Why auditors have raised this query? The December amount, is that December amount, it happens in the December only. It happens in the December only. How much is there? The 10 million has been reduced. In totality, how much you have reduced the cash balance in the month of December? You have reduced the cash balance of 20 million. Is that you're talking about the TT transfer, either telegraph TT. When I said 20 million, but actually 20 is this, the payment is not 20 million for the month of December. It includes a payment of November 2023. That is the reason the auditors will say that we have to take precautions. Okay, if we know that it is not done on the last day of the month, we should not do transactions. And listen carefully, you are the bankers, you have this concept very clearly. The banks will not entertain on any transactions of 31st, maturity, something like that, okay? Because they will not entertain on 31st, 30th December, 31st of the month, 30th of the December, 29th of the month also. Sometimes it will be leap year, sometimes it will not be a leap year. February, for the month of February, it will affect. The transactions they try to avoid transactions or maturities, any recovery of the loans on 31st, 30th and 29th. Because what happens, it get affected if you are putting, they prefer to make it 28th. Now, you are transferring the salaries. Is that very few, if standing instructions, if any standing instructions, any salary settlements, they will take the, in most of the bank, most of the companies, it is like this. They will settle they will pay the salaries on 18th. They will pay the salaries on 23rd. They will pay the salaries on 25th. Or they will pay the salaries on 3rd. First of month also they can do. There is no restrictions on the first day of the month. The only restrictions that will be there on 31st, 38th and 29th. Because if things will not work, definitely it will affect the cash balance. Is it clear to you?
Yes, sir.
Okay. That is the reason. You see the thing. You see most of the companies, they say that we are paying salaries on 26th of the month, 5th of the month, 1st of the month. Is that? Nobody will prefer. If you have any deposits also, keep this, remember this, you will come across any time, loan recovery also, deposits also. They will not say it is on 30th or 31st. They try to avoid it. Is that they try to avoid. If you put 31st, assume you are saying that 31st. When you are putting 31st, what will happen? 1 month will be 31st, 1 month will be 30th. Then there will be a confusion. Just to avoid, just to eliminate that confusion, banks will wish to avoid these days. Fine? Is it okay? Next, coming back, this is you obtain unsatisfactory explanation for all items in the books which has no corresponding entries in the bank statement. There any unsatisfactory explanations for all items. If you are asking something for no, you have shown in the cash book, we have not shown in the bank book. It has not been reflected in the bank book. You have to get the same point. Is that the same? We have to get the explanation from the client why it has been happened with discussion with the finance staff. Is it? Now, substantive process. We are kind of, what it says. Verify contra items. Any idea about contra items? You are the bankers. What is the example? What is the example of contra items? Yes or no? Don't waste time.
No.
cash withdrawal, cash deposit, cash withdrawal from bank account, okay, from our own bank account, cash deposit to our own bank account. What will happen? You are withdrawing or you are depositing the cash. It is a contra item. What is the contra item? It will affect cash and bank simultaneously. Is it right? Your cash and bank simultaneously. Either it will be plus, or you are withdrawing the cash. What will happen? The cash balance will increase, the bank balance will decrease. You are depositing the cash. I'm saying you are depositing the cash into bank. You will withdraw cash for a petty cash purpose. Okay, you are withdrawing cash for a petty cash purpose. Immediately what will happen? Your cash book will decrease, your cash book will increase, the bank book will decrease. Those types of transactions which will affect both the cash and the bank simultaneously is going to be called as a contra items, appearing in the cash book or bank statement with original entry. Is it? What are the contra items which have been deposited or which has been made a withdrawals? Okay, this is very specific because it affecting both the accounts simultaneously. The next one is that point number 8. Any doubt, you stop me. Understand my point? New things will come. I know which we are going to cover for the first time. Verifying by inspecting the pay-in slips. Uncleared that are uncleared bankings are paid in prior to the year end. See, this is very critical. Paying in slips. Okay, definitely paying in slips is nothing but we are dealing in cash most of the time. Okay, even you deposit a check, you will fill up the form. Nowadays it is not there, but don't say that paying in slips are not there. Paying in slips are, you deposit a check through bank to CDM. Is that you deposit a check through CDM, definitely you will get one acknowledgement. Is that when you are withdrawing cash, with depositing cash, you will get acknowledgement. You are withdrawing the cash, you will not get acknowledgement. Is that withdrawing the cash, they will not, sometimes they will not give any slip also. Is that it will not dispense. The ATM will not dispense any slip. But whenever you deposit, keep it in mind, whenever there is a deposit, you will get an acknowledgement slip. Yeah, you will get an acknowledgement slip. Whenever you are depositing a check, you will get an acknowledgement slip. Fine. These verify by inspecting the paying in slips that uncleared bankings are paid before the year end. Examining all lodgements, any plus or minus in respect to the payments, is that in respect which has been refused by the bank, is that bounced checks, is that there any checks which has been bounced, any checks which has been uncleared, ensure they are cleared on representation or that appropriate steps have taken to effect recovery of the amount due. Any bounced checks, what is the treatment you have done? What is the action a client has taken? Okay, what is the action the client has taken? Is it? Now the concept is very clear. A check is bounced, it is a financial criminal offense. Is it? If check is bounced, it is a fine. If it is bounced for 3 months, 3 times any check has been bounced by a single company, automatically it will get delisted. Okay, so people are very careful when we are talking in terms of clearance of the checks. Verify balances per the cash book according to the bank reconciliation. Is it? You have to verify the closing what is the cash book as per, what is the cash balance as per the cash book and the cash balance as per the bank book. Is that not only that, we are talking in terms of a cash book, we are talking in terms of bank statements, and most importantly, we are talking in terms of general ledger account also. Fine. Now, what is the next one? Verify balance with the reply to standard letter, bank letter with the bank statement. Whenever we are getting the reply from the bank, what amount has been mentioned in the bank letter and what amount has been mentioned in the bank balances. Even we have to make sure. Inspect the cash book and bank statement before and after for exceptional entries or transfers, which are material. See the thing there, when they are talking, we are covering the same point. When any TT has been transferred, is that what is exceptional entries are there? Is there any entries with a huge value? Then we have to identify with the, and definitely if it is in terms of material. Material means any high value. Is it any high value transactions? Is it high value transactions? Are you clear about this? Is it simple? Is it? It's not that much difficult with respect to the inventory also. Okay, when we are dealing with the bank book and the cash book, what are the multiple sources of evidence we have to cover in order to make sure that the bank cash book balance and the bank book balance must be, I will not say so, must be tallied or verified. Identify whether any accounts are secured on the assets by the company by discussion with the management. Is there any collaterals are there? Any amount, any assets has been pledged? Okay, any assets has been pledged. Consider whether there is a legal right to set off overdrafts against positive bank balances. See, it happens. Is it right? See, now that they are so sophisticated, is it right? You have an overdraft, is it right? A client will have an overdraft. And they have the overdraft, they will give a standing instruction that every time, at any point of time, the bank balance should be 500,000 reals. I am taking on a higher side. Is it any time it has been high? Yes. Now, if you have taken an overdraft, okay, if you have taken an overdraft, by taking this 500,000 into consideration, the bank can recover that overdraft amount, balance overdraft amount. If you have a bank balance of 750,000 and there is an overdraft of 350,000. There is an overdraft of 350,000. You have a bank balance of 750,000. Standing instructions is how much that you have to maintain. You have to maintain 500,000 at any point of time. Is that client will give instructions to the bank that in my account 500 has to be there. If overdraft is 350, they are eligible. Bank has the right to recover. How much? To recover only 250,000. Okay, only 250,000 as an overdraft. Still, the overdraft will have an outstanding balance of 100,000. This is what it says. Consider whether there is a legal right to set off overdrafts against positive bank balances. Determine whether the bank accounts are subject to any restrictions by an inquiry with the management. Any restrictions? There will be restrictions. There will be restrictions into foreign transfers. Is that there will be restrictions into a foreign transfer? There will be a restriction saying that yes, if it is less than 100,000, one person can authorize to sign. If there is more than 100,000, is that more than 100,000 to 500,000, then what will happen? the two staff members are eligible to sign, authorized people. If it is if it is more than 500,000, then they will say that you required an approval from the board that this much transaction has to be approved. Means the different levels will be there. The levels are increasing, definitely the authorized signatories will also vary. Okay, in some cases now maximum one person or maximum two people. Is it maximum two people? If you are going to have more than 500, we will have two different people. Is that two higher level staffs? Okay, with it may be with that respect to senior level management. Okay, with respect to senior level management, that classification will be there whenever there is talking about it, the restrictions. Review draft account to ensure that disclosures are complete and accurate in terms of accounting standards. Is it review draft accounts means before see why we say draft account. Before audited it is draft financial statements. Is it? After audited it will be this question I am expecting from you. Getting my point? You didn't ask. Almost 3-4 times we have gone through. You should ask what is the draft, why we are using draft financial statements. Draft financial statement, draft accounts or draft financial statements it is before it has been signed by the auditor. Is that? Before it has been signed of the auditor, anything will be identified as a draft accounts or draft financial statement. Once you have audited, we have signed. Is that? Once the auditor have been signed, then there is no point of reviewing. Is it right? There is no point of reviewing. We are only reviewing the draft financial statements. Fine. This will be there. This we are using. You revise previous chapters. We are using draft accounts or you are using draft financial statements. You should have asked me this point, okay? Every time I am revising, I am expecting. Stop me, keep it in mind. Stop me wherever you find doubt. Wherever you find doubt, message me. He said, wherever you find out, message me. I will get back to you. Wherever is there. Now, again from tomorrow, I will post questions. I will post questions, small questions and big questions also. Take your time, 30 minutes, answer that and get back to me. Is it right? These are the things which we have to work out. Okay, these are the things which we have to take care of whenever we are auditing the cash and bank. Is it? Here I have not mentioned. 1 minute. This is 11, 12, 13 and 14. They have 14. They will not ask you 14. Keep it in mind. Based on scenario, you have to respond. Okay? Scenario you understand, response will be very, very simple. If the exam asks for, see they have not, if the exam ask for audit procedures, remember that although the bank confirmation letter is important, the other procedures need to be carried out. Don't stick to the bank confirmation only. F8 examining team has previously commented that candidates lose out on marks for not focusing on other procedures. Okay, they are focusing only on bank confirmation. Here they have to focus on other. Remember that the bank confirmation letter shows the balance by the bank at the bank as per the record. So this must be reconciled to the client records. Fine? Now, are you clear about this?
Yeah.
Till now, it is related to what? Till now, it is related to bank. Okay. Now, it is related to cash. Yeah, it is how what is the procedures we have to follow when you are auditing the cash. Most businesses hold cash. This presents a fraud risk as cash is easily misappropriated. In some types of industries, sometimes retail, is a retail industry, grocery stores, retail stores, cash held may be a huge amount. Is it right? We have a huge amount. People will deal with cash in a at a high frequency. In other businesses, it may be a small amount, such as in other cases, we have only petty cash. The best way to carry cash, the way for external auditor to audit cash in hand is to carry out a cash count. Cash comprises of what? Notes, unbanked checks received. You have received any checks which is not deposited, is it right? The unbanked check received, not deposited. IOU, I own you, okay? IOUs will be there, and any credit card slips will be there. You see the thing, whenever you swipe it, okay? Whenever you are swiping your card, there will be two slips. One is your copy, one will be the copy of the vendors, okay? Vendor copy will be there and customer copy will be there. Whatever the copy of the vendor, they will keep with them. Is it? That is almost treated as a cash. The cash count has three phases: planning stage, counting stage, follow-up procedures. Is that this is before, this is during, this is after. Before the count, during the count, and after the count. Fine. All cash balances should be counted at the same time, same day. Okay. Need to establish locations where we are holding the cash. Is that where you before the count? Okay. Before the count, it should be at the same time. You know where the cash they are holding it out. Need to establish what is the time. We have to be very specific to time. Need to know the names of the people who are handling the cash. Is that who are handling the cash and who are attending the counts. Okay, where a location is not visited, it may be to get a confirmation the balance. If you have multiple locations, if you are not in a position to attend, then you have to get from the confirmation letter from the balance. Is that this is planning stage. During the cash count, all cash, petty cash should be written up to date in ink. Is it right? In ink means in black and white. Okay, should be in black and white printed form. Okay, in a black and white in a printed form. At the time of count, all balances should be counted at the same time. All negotiables must be available. Checks, if any checks, they have mentioned what are the things we are having. Is it notes, unbanked checks or unbanked checks? Is it right? All must be available and counted at the same time as cash balances. At no time should the auditors be left alone with the cash and negotiable securities. Means all the time, whenever you are doing this job, there should be minimum two members should be there. Is it right? You should not have only one member. That all cash and securities counted must be recorded on the working papers, subsequently on the current audit file. Reconciliation should be prepared where applicable. If, for example, in terms of petty cash, is it right? In terms of petty cash flow, impress system. Even for the petty cash, there should be a reconciliation. What are the procedures we will adopt? Count cash balance held and agree to petty cash book or any other record. Is it? count all balances simultaneously one time and all counting done in the presence of individuals responsible. You have to assign who is responsible from the both sides. Inquire any IOUs or cash checks outstanding for a longer period of time. The validity will be for 6 months, but you cannot take these 6 months as granted. If it is more than 3 months, 4 months, it has to be, no, what are the reasons? Obtain certificate of cash in hand from a responsible official. It should be in a printed form. It has to be in a signed form. It has to be signed. Confirm that cash and bank are reconciled above are correctly stated in the financial statements. Whatever we have done the reconciliation, that amount has to be reflected in the financial statements. What is the follow-up procedures once cash count is over? You have to obtain certificates of cash in hand. Auditor, okay? Auditor has to obtain cash certificates. Verify any unbanked checks, cash receipts subsequently paid in or agreed to the bank reconciliation. Any unbanked checks not deposited in the bank, very sensitive issue. We have received the checks but we have not deposited. Reasons for not depositing, is that by inspecting what is the reason of not depositing in the bank. Ensure IOUs and checks cashed for employees has been reimbursed. Means you should not have any advances, any outstanding to any of the clients. Is that as a matter of fact, any advances, any advances should be settled. Should be settled before, before reporting date. That is the reason you see your own organization. Any advances taken by any staff member, they will say that you have to settle those advances before the end of the year. Before you have to end of the year. Review any IOs or cash checks outstanding for unreasonable time that has been provided for. Verify the balances as counted are reflected in the accounts. Whatever the balances is there, means it has to be in the cash and bank account, subject to any agreed amendments. Any changes are there because of sometimes it will have some shortages. Sometimes it will show what are the reasons for any imbalances, and inspecting the draft financial statements. Whatever we have verified the bank balances, that has to be reflected in the draft financial statements. Fine. Can we complete this one? Very short and small. Can we complete this exam question? Very short. Is it okay with you? Yes or no?
Can we complete it tomorrow, sir?
That's why I'm asking now.